everyone, welcome back to ASX Market Watch. Thank you very much for joining me today. In fact, it's really good to have you here, checking out the markets, checking out where the world is heading from a chartist's point of view or a technical point of view. I don't propose to have all the answers, but I do love to check out the charts, and I know a heck of a lot of tools, and we'll actually be looking at a heck of a lot of tools today based on the charts, based on market masters over history, the tools that they've used, and in fact, two guys in particular. Today, we've got two of the giants. We've got Charles Dow and his theories, and then we've got WD Gann and his theories, and they're actually coming into opposition. They're actually clashing heads. We've got one in one corner, one in the other corner. One is saying up, one is saying down. So what do we do and who do we believe? We'll actually check that out. There's a whole bunch of tools that we're getting into that you can take and use in your own trading. So it's really exciting stuff, guys. Thank you so much for stopping by. It's really great to have you here. Now, the first one, we've got four. We're looking at them all today. Again, all ordinaries in Australia, down under, looking at the Dow Jones in the Americas, the FTSE in Europe, and the Hang Seng in Asia. But the first one we're looking at is the All Ordinaries in Australia. Very similar to the ASX Top 200 in Australia, but what have we got? Well, apart from this downtrend line that I've just drawn in just out of habit, if anyone's looked at the previous market watches, trend lines are so simple. They're just a line on a chart, but they can be extremely powerful. But before I get into that trend line, what have we got here? Peak, higher trough, lower peak, higher trough. We've got this little section in here which could have become a continuation pattern. In fact, if it was to break out to the downside, which it didn't, thank goodness, we had our down move, our little consolidation pattern. If it broke out to that downside, we really could have been seeing 3,800. Did not happen. Thank goodness again. Instead, what has happened? We've got our higher trough and higher peak. And what is that? That is a Dow theory entry based on Charles Dow's writings from the late 1800s. It's 130 years old, this method. And from his writings, they coined higher peaks, higher troughs on a weekly chart. That is your entry signal right there, based on our index, on the All Ordinaries. So that's an entry signal. What have we got from WD Gann's perspective? Well, as we pointed out last week, pretty simple stuff again, guys. This one is based on mathematics and percentages. Pretty simple when you get into it. Doesn't have to be that complicated. This is just you divide the last move, which is the entire bear market. You divide that last move into quarters, halves, obviously, and then Fibonacci, which is 38.2% and 61.8%. They go into Fibonacci in books like the Da Vinci Code and stuff like that, but you can actually use it in your trading as well. It's pretty cool, and it actually does work quite a lot of the time, which is always a good thing to have in your trading. But what have we got here? 50% retracement, which is WD Gann. He says it is the strongest resistance level when you're looking at the market coming up again after a previous move. So we've got our previous move down, and the market is still well below our 50% level. In fact, the 50% level would be at 5,000 on the All Ordinaries, or approximately 5,000. So that is something to look out for in the future. That is where resistance could be happening, quite strong resistance. And also, guys, that downtrend line that I drew in as well, let's get back to that, because that will actually provide resistance in the future as well. So that is around 4,730. That's a closer resistance than the other one. So yes, we've got our entry signals, and yes, personally I am buying stocks, but I'm also being extremely careful because I know there's a lot of resistance in the future coming up. We're far from blue skies. Blue skies would mean that there's no resistance. We've got higher peaks, higher troughs going into the future, nothing in its way. At the moment, we've got a lot in the way. So I'm going to be completely honest, there's a lot of resistance in the way. But again, what have we got? We've got our entry signal, and that's all I need. This is a daily chart, and as you can see, even if I just quickly draw in this shorter term trend line, it's crossed the trend line and it's made a high peak and high trough on a daily chart as well. That would be a short-term buy signal. So we've got our short-term buy signal, we've got our medium-term buy signal on a weekly chart, but then we've got our resistance in the future as well. Hope that helps on the All Ordinaries. The next one is the Dow Jones, and the Dow Jones is a really simple one really quickly because there's not a lot going on. In fact, it's lagging behind everyone else. It has not yet made a Dow theory entry, as you can see. If I'll just enlarge that a little bit, we've got our peak, high, trough, hasn't yet closed above the previous peak, so that's all there is to it based on that. What we do have on the Dow Jones, however, as you can see here, is this massive, massive support at 10,000. So 10,000, it cannot close below it. 1, 2, 3, 4, 5, 6 times it's actually bounced off it and cannot close below 10,000. Someone or something is keeping the market above 10,000. It does not want it to go below it. No doubt, because there's a lot of stops and potential margin calls that could occur if the market goes down below that level. Again, even though September is traditionally the weakest month of the year, cyclically, if you look at John Murphy's book, he sort of describes that technical analysis of the financial markets, I think it's called. Great book, well worth having in your library. He goes into cycles. September is the weakest month, but still, we're still going up, and so that's a pretty strong sign as far as I'm concerned. But yeah, again, still in a sideways range on the Dow Jones, not going below 10,000. That's what we're looking for. We've got resistance in the future at 10,800 based on that long-term downtrend line there. Next one is the FTSE, just quickly. Now the FTSE, again, this is a weekly chart, and the best part about the FTSE is we made our weekly Dow Theory entry as well. So yes, that actually made it before the All Ordinaries, so the All Ordinaries is lagging a little bit behind the FTSE. Still, at least we did it this week. Happy days, and the FTSE has done it a couple of weeks ago. Now, yes, we did call it, and yes, the market has gone up since then. It was about 2 weeks ago we called it. The market's gone up since then. Happy days. What do we have now, though? If I just enlarge this little bar here. Now, and again, this is our downtrend line where we might find resistance in the future. And where has the market failed to sort of reach? It cannot reach that downtrend line. So that is already acting as resistance. And what is this single bar here? If I can just put a box around that there. So that single bar is what you would call, what do they call it? A shooting star, I think, in candlestick terminology. But all it means, like if you look at exactly what it means it started low, it's gone up throughout the week, and then it's closed low as well, which means that someone has come in throughout the week and sold a whole bunch of stock, and it's pushed the market down again. That's all that means. That's basically, you're looking at buyers and sellers, supply and demand. Supply has basically overcome demand at the end of the week, and that's basically what the chart is saying. It said, yes, there were buyers, but they were well overcome by the sellers. Are we still in an uptrend according to all our theories? Yes, absolutely. This is a daily chart, higher peaks and higher troughs, still in an uptrend in a short-term basis. This is a weekly chart, still in an uptrend on a weekly basis as well, so a medium-term basis. So again, on the FTSE, same deal as the All Ordinaries. We have our entry signal, yes, but we have a lot of resistance in the future as well. So tread carefully, guys. And again, me personally in my own trading, I'm buying stocks, but I'm also being extremely careful. Last one is the Hang Seng, and the most exciting part about the Hang Seng, this is a weekly chart. I'll just turn it into a daily chart because that's even better, I think. What we had is we actually called this move way back in basically May or June 2010. So we called it pretty much at the bottom. Now, in the last couple of weeks, we were close to having an exit signal right about here, but the market, if I just enlarge this, the market could not close below its previous trough. So it went below it, but it couldn't close below it. And in fact, that's the opposite bar. If I just enlarge that again, this bar here is the opposite of what we were looking at, the shooting star. I think in candlestick terminology, they call it a hammer, which literally means reaching for the bottom. That's what it's done. It's reached for the bottom, it's found the bottom, and then it's come back up during the day. Now, these are single bars that can move the market, guys, and that's exactly what it's done. That's why you would sort of study candlestick terminology if you wanted to go that way, because you can find single bars that will move the market, and they give you a very good risk to reward ratio as well. If you put your entry at the top and your stop loss at the bottom of the bar, that's one method of actually trading with them too. So since then, higher peaks and higher troughs on a daily chart, but also weekly chart. Boom, hang on, there we are, higher peaks and higher troughs. It's also gone above that longer term trend line. So this could be what we're looking for. And from an Elliott Wave point of view, every single week I've said that our target is looking between, if I can just get that to go properly, come on tool, you can do it. There it is. Between 24,000 600 and approximately 30,000. So that's based on the previous move, again using our Gann and Fibonacci extensions this time instead of retracements. If that doesn't make sense, there's a bit of information on that on my site, asxmarketwatch.com. Check it out. It's got a whole bunch of tools, free course, and my trading diary as well, which is what I'm actually physically trading myself, just so you can see me walk the talk, because basically I just want to show you that I am doing exactly what I'm showing you as well. It's not just theory. It is actually pure trading goodness. So I'll see you next week, guys. Hopefully there'll be a whole bunch more trading tools, and even the market as it's starting to break out around the world. There is a lot happening and potentially more happening next week as well. So I'll see you then, guys. Bye for now.